Good morning, everybody. Welcome to the Flow Show. A new week begins Monday, the 13th of October. Hopefully my sound's all good and sharing's all good and everything with this bloody Zoom's all good. If not, I don't know, I might pack it in for the day. Anyway, hope you all had a good weekend. I hope you're ready for the week ahead. I need to click another screen. 1 second. Right, let's get cracking. I'm going to start with some data. Out of China over the weekend, overnight, we had some trade balance data, which showed a little bit of a drawback in the surplus that they had there. That's in yuan terms there, 645. Also a bit of a pullback in dollar terms too, though activity was doing okay. Imports and exports both coming in at healthy levels. That's in dollar terms there. Exports up 8.3%, imports up 7.4%. So activity picking up there, though we'll have to see how that gets kiboshed or potentially kiboshed with all this latest bun fight that's going on, which I'll speak about shortly. While we're there on the numbers, we had some German data out as well, some price data, wholesale price data coming in as expected on the month at 0.2%. Over in Japan, tomorrow's, or overnight for us, but tomorrow for Japan is potentially going to be a bit of a crunch point for Takaichi and their LDP. Because the LDP and the Komeito parties are going to hold a joint meeting regarding the withdrawal. That's the Komeito withdrawing from the LDP coalition. Japan's CDP, Ishin and Kukumin leaders are going to meet also tomorrow to discuss potential partnerships, and Komeito has also indicated that it may hold talks with other opposition parties. So politics in Japan still at loggerheads, no clear outcome. It's still touch and go whether Takaichi will even become PM officially, and we're still waiting to hear when we're going to get that extraordinary Diet meeting to decide that. So politics still not far from trading the yen, so keep an eye on that stuff as well. Over in France, PM Le Cornu is back after resigning a few hours after becoming PM officially. He resigned. Now he's back to pretty much do the same task again. He's going to be forming a government which has pretty much been put together, and now he's got to try and get a budget on the table that everyone will vote for. So he could be resigning in a few days again as that revolving door on Hotel Mitterrand remains in place. Over in Germany, Economics Minister Klingbeil says that they are looking at a new exemption for defence spending. This is, long story short, they've got something called the debt brake, which they're not allowed, or they've limited themselves in how much debt they can issue, new debt that they can issue. They've already tinkered with the debt brake once. They're now going to seemingly tinker with it again, because all defence spending apparently won't be covered under the debt brake, allowing them to take the handbrake off and borrow more and get around their own rules. So this is Germany looking to borrow more and more. That's not going to be too good in terms of markets thinking for the euro. I mean, Germany is the most, or has been the most fiscally responsible country in the Eurozone. So they're loosening the purse string, shall we say. Let's see how much that goes on. Coming over to some data from last week. On Friday, we had Canadian jobs numbers, which came in a pretty solid, up 60,000, just over 60,000, with the bulk of that, all of that going in the full-time employment. A whopping 106,000 got tacked on there, while part-time came down 45.6 thousand. The unemployment rate stayed steady at 7.1, which was pretty positive, seeing as the participation rate rose a pip as well. So still a bit of a jumpy jobs market over there in Canada, and that unemployment rate will still be a worry for the Bank of Canada. After that data, the probabilities for an October rate cut by the BOC dropped to 57% from 72% before that data, or it was 72% before that data. So the market washing out a bit of expectations for another cut coming. That can all flip again on the next round of data, of course. We then got the Michigan flash numbers for October, consumer sentiment. That it was a bit meh. It went backwards, was expected to drop to 54.1 from 55.1. Instead, it came in better than expected at 55, but still down a small morsel over last month. Current conditions, though, that improved to 61. Expectations, that, if I can find it, came in at 51.2. So that was a bit of a loss as well. On the inflation metrics, 1 year CPI came in a bit low at 4.6. 5 year was unchanged. So overall, there was no disasters in the data. Some small minor changes, not a big deal there. If you want a bit of data, the St. Louis Fed has an economic news index for real GDP nowcast for Q3. And my mate, Mr. Brown, is going to love this because they count it to 5 decimal places. So their Q3 GDP nowcast came in at 0.42455% versus a 0.18243% prior. Crazy, just round it up, yeah, bozos. Anyway, so they're seeing that slightly better index numbers there for Q3 anyway. We have apparently got our final 5 for the Fed job, and no real shocks. Bowman, Waller, Hassett, Walsh, and Ryder are in the final 5. Now, obviously, Bowman and Waller are current Fed members. Hassett is a bit more of an economist. Walsh is a former Fed head. And Ryder is off of Wall Street, but been involved in various Treasury committees and whatnot. So no big shocks there. We'll have to see how we know pretty much sort of Bowman's and Waller's standpoints as some of the others. It looks like on the face of it, nothing the market to get its teeth stuck into. These are pretty old hands in the game. So our mate Zervos not getting a look in, he would have been fun. Waller was out not long after. That was dropped by CNBC. He was actually speaking to CNBC as well. He says he doesn't know if he is a Fed chair finalist or not. Then speaking more broadly about the economy and monetary policy, he says there have been shutdowns before and there is a lot of private sector data to rely on, which shows there's a bit of a split amongst some of the Fed heads. Some are happy to rely on the private surveys and others are dismissing it, saying there's not enough data. So there's going to be a bit of a to-do at the next FOMC. Anyway, back to Waller. He says ADP data is consistent where the BLS data was heading, which was towards negative jobs growth. He says the labour market is not tight in any way. The Fed needs to cut rates, but needs to be cautious about it. And says either the labour market rebounds or GDP will weaken. That is where the caution comes in. Then he said the Fed is not going to be aggressive or fast and will move in quarter point steps, which is a potentially big comment considering how President Trump would like rates to be cut. So that might go against his rhetoric, count against him in the final runoff. Fed's Muslim says inflation is materially above target and says only 10% of inflation we are seeing is tariffs. Says he's open-minded on a potential further cut as further insurance. He also said that St. Louis Fed will conduct its own survey to measure the labour market this month. They're going to do that to 20 decimal places probably. But anyway, let's see what they come up with as far as the jobs number goes. For those that don't know, the St. Louis Fed, they run a whole big data series called Fred. So you can get a lot of information and data off of that. So they do a lot of work in terms of data already. Hence why they're going to have a go at guessing the jobs number. Let's see what happens with that. And while we're talking about data, the BLS is going to publish the September CPI data on Friday, the 24th of October. Some of you may be seeing that on your calendars for this week, but with the shutdown, it's not happening. But the BLS has already said they're going to need to produce this data because it makes up part of calculating some social security payments, hence why that's being released. But that's coming on the 24th of October. That's a Friday at the usual time. OMB Chief Vault says that the job losses, the layoffs have begun. As far as I can tell, there's only been about 4,000 jobs layoffs announced so far, and they even managed to fuck some of those up. They cut some 1,000 jobs at the CDC, only to then reverse a lot of those after realising that some of those layoff notices had gone out to some people by mistake. So it's already becoming a bit of a mess. Right, let's get stuck into Friday's shenanigans. Now, this all came around. We knew about the export curbs that was announced last week, and that seemed to, get catch the market on the hop a bit, but nothing more really came of that. Well, that was until China started making a few noises Friday afternoon. The first thing they said was that the Ministry of Commerce strongly opposes the US imposing fees on Chinese ships, which was announced last week as well. Trump putting on fees for Chinese ships landing at US ports, saying that it hurts Chinese firms' interests and hopes the US corrects this wrong practice, and calls China countermeasures a legitimate defense and action. So that was one of their reasons why they went with those export curbs on those materials, rare earth materials and whatnot. So Mr. Trump decided to then drop a couple of truth bombs on us. He said that he's going to put on a massive increase on Chinese goods, 100% tariffs on what's already in place, so above what's already in play, with a deadline of November the 1st. He said China and Xi has pretty much taken a really bad turn. It sent them a really worrying letter, not hitting just the US, but hitting the globe, the world as well, other countries as well. So he really took a hard line, and it looked like Xi had really hit them hard. So Trump came out fighting, as you could imagine, saying it could be much worse for them than it will be for the US. He can do more measures and things like that. And the market had a little bit of a paddy, as you could tell by prices if you were around Friday afternoon. And that's we finished the week pretty much on the back foot. If you look at things like dollar yen, we were all the way down here in the low 151s. And then Sunday, things started to calm down a bit. There was talk in the press that perhaps China had overreacted, and that was from the Chinese side. Maybe they had overreacted a little bit or come on too hard. There was a little bit of drilling back by China saying that, oh, yes, we've got these export controls, but, we're going to apply them case-by-case basis. It's not blanket. A little bit of a drawback. And then Mr. Trump dropped a truth bomb late last night saying, don't worry about China. It will all be fine. Highly respected President Xi just had a bad moment. He doesn't want depression for his country, and neither do I. The US wants to help China, not hurt it. So obviously everyone's looking at what the markets were doing back then. Bitcoin absolutely fell out of bed. We have obviously seen a recovery since then on that Trump tweet and everything else. However, both the stuff that China's dropped on the US and the threat of Trump's tariffs are still in play. Okay, no one's reversed those at all. So they're still very much in play. They're still going to continue. So that threat is still there, despite them pulling back a bit, shall we say, on the rhetoric. We have seen a bit of a recovery in a lot of stuff, but that's why you're seeing things like gold and silver rocking on to new highs, because the threat is still there. China's curbs on exports and Trump's threats are still there. There's some other factors in play. particularly in silver. Give me 1 second, please. Sorry about that. Someone rattling around the garden. It's just a window cleaner. Didn't realise he was coming today. Thought I was being broken into. Anyway, so we've still got these curves in play. We've still got metals moon shooting. So that's not going to change at all, really. But we have to see what headlines we're going to get from this point forward. We'll have to get on. In the meantime, prices, as you can see, gold, silver, reaching new time highs. There is other news. Again, this has been put in our chat room by Michael. There are shortages now being called upon. People shipping silver around the world, taking physical delivery, blah, blah, blah. So it's all the usual stuff that might snowball into something to keep these prices supported as well. If there's going to be shortages, people want to load up. There's arb trades as well going on, different prices between the US. A bit like what we saw in gold a couple of months ago. Same thing's now happening to silver. But we're probably going to see these precious metals supported for quite a while now until perhaps things calm down. So that's where we're at coming into Monday. We need to have a look at what's coming up this week. It is a partial US holiday today. Bond market is closed, but stock markets will be open. So we'll get a bit of reaction to all that weekend news. Stock futures have most certainly recovered from the pit they fell into on Friday. Data-wise, I would say we got some bits coming, but not a lot from the US. Pretty much all the US data is cancelled. That's the state-produced data. Anyway, we do have some private surveys coming out. It's the first manufacturing stuff starting to drop. So tomorrow we get the RBA minutes. We'll see if there's anything in there we don't already know. That German CPI is the final number, so it shouldn't be too much. Well, that we finally get some UK data this week, which has been a bit quiet on the data front from the UK. So the pound will be taking an eye on that. We get the labour market report for what that's worth tomorrow morning. A bit of data out of Switzerland, Zoo survey. We'll see how crappy things are over there. We will get the NFIB Small Business Optimism Index. So we'll see how small and medium-sized firms are faring at the moment. Wednesday, China produced some prices data, CPI and PPI. So again, we'll see whether things are picking up over there. Inflation hasn't been that great over there still, and the market is expecting some rate moves from China towards the end of the year. We get the Empire Manufacturing Index, which has been a bit of a loose cannon, shall we say, over the last year or so. It used to be a good bellwether for manufacturing, but manufacturing has been down in the dumps for over 2 years now. So that data might not get anything, but we will look at components like jobs and prices because that's what the market is looking for in terms of the Fed. We get some manufacturing or machinery orders from Japan on Thursday, jobs data from Australia as well. So that will either back up or not what the RBA last said at their meeting. We get some GDP data from the UK, industrial production as well. Again, a lot of this data has been fucked up, basically, to put it bluntly. I think this is probably the industrial production data is probably the only data yet that they haven't said they found errors in, if I'm correct. I could be completely wrong, but they found errors in problems in pretty much every other piece of data thus far. In the US, we're not going to get any of that data as pointed out. So we don't know retail sales, we don't know PPI, we're not going to know CPI and all the rest of it. But we will get the Philly Fed manufacturing data. So again, just another look at what's going on in that sector. Again, prices and employment will be the important factor. On Friday, again, another quiet one. Final numbers from the Eurozone CPI data wise, it's all US, and it's all going to be off the cards. Now, the industrial production data is actually data that the Fed produces, but they've already said that won't be coming because the data they use to compile industrial production comes from state sources, so they can't get the data they need to produce that data. So we ain't getting that neither. So data wise, fairly quiet this week. I'm sure there's going to be plenty of geopolitics and everything else to keep us entertained, shall we say. Right, let's have a look at what's going on as well. Let's see any questions from you guys. Wonder what happens to soybeans if China doesn't buy from the US. Well, there'll be a glut if they can't sell them elsewhere. Long story short, prices will drop and American farmers will be in trouble, Fred. They're in trouble anyway because they ain't getting the 12 to 13 billion aid that they were due to get to help offset the prices of tariffs. So that's something that's going to be grinding along as well. Obviously, we're probably going to be playing the on-off shutdown game, whether they go for votes every day this week like they did last week. We are in week 3 and no signs of changes to that. So keep your eye on that. The longer it's dragging on, the greater the pain is likely to be. But yeah, that's still going on. Right. What else is going on? So I was just talking about dollar yen. Might as well start there. So we had this big move on Friday, really knocked the wind out of the sails of a lot of the market coming so late on a Friday afternoon. I didn't actually manage to get, I'm still short from up at 153s. I managed to get some off around the 50s. Completely missed that late move down there. So I didn't get any of that. We're back up, back above 152. We're just struggling around this 152, 25, 30s area. Not making any sort of decisive move here, whether we're going to get back above or hold it or hold below. Really, I'd keep an eye on this 152 again if we get a dip to there, if that's holding. Obviously, the Japanese political stuff is still front and center. So that could keep the yen on the back foot for a considerable while longer. Then we've got this intermediate line, bit of a pivot point, 152, 65, 75 up here. You can see we've been above, below, above, below, above, below, above, below, above, below. So just take your cues from that. If we can't get through or if we get above, can we stay above it? Otherwise, it's 153 and these prior highs in the 153.20s. But certainly, we don't seem to be wanting to continue to see a huge amount of yen weakness since we had that big move. But that doesn't mean we can't go higher. But as I've been saying, it's going to need another catalyst, I think, to get it going, or it's just going to do its grinding thing and keep going up. Euro dollar, that ran into an old level after the bounce on Friday. We got up to 116.30s. Banged ahead, banged ahead, banged ahead this morning, and then it's given up there. It's given up 116, trying to give up 115.90. I'm going to keep an eye on this 115.70s level again because it was a prior low. We broke it and then we found resistance into it. Couldn't really make a decision. Then we got back above it. So I'm not going to place too much faith in this, but if we bounce from there, then that could mean we're going to be changing this series of lower lows. Even if we get down to 115.60s and bounce from there, that might insinuate that something is changing in this pattern. But I want to see a bit more price evidence of a bottom forming before I believe we're done with this downtrend. So in the meantime, we could still yet be heading lower down. Dollar CAD didn't really do an awful lot, but it was pretty significant. And on Friday, we held this break level here, this line that I've been looking at for quite some time. I did actually add back to my longs on that test down there. It's tried to get into 140s. It's seemed to be struggling a little bit. We need to keep an eye on this 140.20s and those highs up at 30. So the old fib around here. Unless we're breaking above that and really holding it more than we've done in this sort of price action, you can forget about further upside. I hope it doesn't happen, but what we could find is that we're going to bounce around in another pretty tight range, a bit like what we did here for the last week or so. So 2 levels pretty clear. If we're breaking back below this again, or on another attempt, then we're probably going to be going back into this traffic area here. But while we stay above it, keeps the top side in play. Euro sterling, that had a failure at the 87.20 on Friday, and it's pretty much been downhill ever since. Playing around the same levels. We did have a little poke this morning or late overnight under that 86.90 area, but we're trying to hold it again this morning, but that's looking like a very weak bounce so far. 87.0607, and then it's given up the 87 level pretty quickly. So again, this one could be running out of puff, and once more we're going to be heading back into this area down here, which again just keeps this bearish move going. Okay, so if we make a new low, even by a few pips, then it's going to suggest that there's more downside coming. Ali, BOC rate pricing will change. No. What do you mean this has gone too high? It's gone from 135, 136. Can it top? No. Why has it gone too high? Look what it's done all year, Ali. It's done nothing but drop all year till the summer, and then it started to find support. So gone too high? No, we can't even get over the 38.2. So in this terms, it hasn't gone too high at all. It's respected the trend still, because we can't get over that and hold over that 38.2. So it's still got every chance of heading down. But this dollar CAD has really been bucking the trend in terms of correlations and stuff. When we've seen dollar weakening elsewhere, this one stayed solid. So, you know, we got the USMCA in play as well, and all those negotiations. So you can't just take this pair as, oh, it's dollar CAD, it's the dollar as well. So what happens in the dollar is going to happen here. It's got its own things and own themes to be trading on, which goes the same for dollar MEX. This one put me out of my recent shorts that I took. Let's go here. When I took shorts into here, these moves into the 1850s, I got some off, but this just blew me out on Friday. And no surprise to see us back below straight after that. And we're back in the box. I haven't shorted this. I'm tempted to have another little short. But again, I want to see whether we got this 1850 as a solid resistance again, or whether we've cracked the egg and we could see a bit of a range extension. Maybe from the 30s, we start seeing something up to these highs now. So yeah, same thing here. You know, everything that the dollar has been doing elsewhere, and this one stayed pretty tight in this range. Again, USMCA stuff coming to the fore in this, as well as other things. China, that's obviously a good measure for what's going on over there, and it has stayed pretty stable. We did obviously have a look a bit higher, couldn't quite get up to the 715s in CNH. So China not willing to let this one off the hook, or off the leash, shall we say, just yet. Still staying pretty tight. Decent support, 712s, and we've got resistance into this area, 714s, 715s. If they start to let this go, that will show that something's going on, and obviously you're going to see it first in the CNY. So if you're looking at all this US-China bum fight from the Chinese side, keep an eye on the currency on the yuan, because that will show you whether they're taking stuff seriously, and anything Trump throws at them, they're going to combat by moving their rates around, their FX rates around. Euro Swiss, really sticking like glue. Yes, we did have that move down, that risk move down on Friday, but we're back in the 93s now. That sort of pretty much confirmed the range, even though we keep getting these little extensions, but we're not holding any of these breaks of that 92, 85, 90 area. So this one is still very much locked in place in this range. We've had these extensions, we've had these moves above, but otherwise it is in a pretty solid consolidation range at the moment. And while it's in that range, try not to get cut up in the middle. Try the edges. If you get moves to extensions, try the edges. The same with dollar Swiss, similar sort of picture. Talking about this last week, we had a run up, got up to this next area, nearly got up to the 81s, couldn't quite. Now we're back below, and now we're finding a bit of resistance into this 80-30 level again. So this one goes back in the box as well. Now, I'm not saying it's all dead and buried and all this stuff with Trump and China is all finished with. It could escalate further, and then we're going to see more risk-off moves. But if we get a further dial down, if we get the meeting that was scheduled to happen, supposed to happen, going ahead between Trump and Xi, that might calm things down further. But yeah, a little bit of chest beating going on for this one. One of the movers that we got, and we're not going to get a reaction today because bond markets are shut, was yields finally decided to make a move again just on those headlines. We saw a dip down, got down to 403, not quite as far as the 4% mark or these prior lows. We've recovered a bit. I suspect if there's no real news when these reopen on Tuesday, we're probably going to creep back up to the 410, 412 area, looking like we were going to go for another test at the 420. So because these are shut, just keep an eye on the dollar. If it gets out of kilter, potentially with what yields are doing, particularly in dollar yen as well. You're out of all your Swishy shorts. Good. Made some nice money there, Ali. Well done, mate. Right. Anything else for anything else? Quick look at the Aussie. Similar picture. We've had this impulsive move down. It nearly got down to the trend line. It got down to this 84, 80 level, which is, again, one of those on-off, 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 on-off lines. Couldn't stay below. The bounce has got us up to the zone, and we're just finding a bit of resistance coming into that zone. So, again, after that high, we're seeing a bit of a bearish pattern developing, though it is a bit more news-driven than what we're seeing in some of the other pairs. But, you know, it is what it is. If we can't get through this zone, then maybe we are heading for a bit of a trend lower. So keep an eye on that as well. Not much else. Not much else. Yeah, it's a US holiday. As I said, Dimmy, half the market is shut. Stocks will be open, but bond markets won't be. I'm not sure if stocks are on half day either. I have to check that out. Not sure. All right, well, let's have a nice early one to kick the week off. Seeing there's not much else going on at the moment. Trade safe, everybody. Have a great week. And we'll catch up with you again tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.